This is not financial nor professional advice. This video is for entertainment only. Hey everyone, it looks like Santa Claus is trying to return to the market, at least somewhat, in those last few days remaining right before Christmas, before the Christmas weekend. We get data on the 23rd of December on the PCE, the personal consumption expenditures, the PCE, and that we're walking a narrow line for that to be positive. We want inflation to be down, but we don't want it to be down too much. It has to be like in the fairy tales. It can't be too hot and it can't be too cold. It's got to be just right. Okay. You know, these are the fairy tale days we're living in. It's possible this is going to happen. The Fed seems to be playing it about right. We're going to have a little bit of a Christmas rally. And then after Christmas and going into New Year's, I think the market will continue to go up because mutual funds and other fund managers, they want to make their funds look good, and so they will be dressing up their funds and probably buying stocks at the end of the year, especially since they've gone down somewhat. It leads to people buying. And so we're probably going to have a pump up towards New Year's. And then after that, we don't have a CPI increase on the rate until February 1st, and that's looking to be a 0.25 increase, which should be somewhat bullish for the market. It's an increase, but it's sort of signaling we're slowing down the rate of increases, and we want to see what the effect is of all the increases we've done so far. And also, there's a bit of news out of Japan that Japan is increasing their interest rates. And they have been so against interest rates. They've been keeping it at 0.25, in these inflationary times, which is unbelievable. But they're increasing it to a big 0.5%, which is a big deal. It's a big deal because people think they're going to keep increasing it just because the yen is falling so much in comparison to the dollar that it's hurting their economy. And they're almost forced to increase the rates so they don't get too out of line with the United States. The yen, the Japanese currency, is the third largest currency in the world. The number one currency is the dollar, the number two is the euro, and the number three is the Japanese yen. So it's a big deal that they're increasing their interest rates, and maybe this is going to signal further increases. We will see. But I think we have an increase in the stock market coming our way here, and it could extend into the new year, as that 0.25 should be bullish for the market. I think if we carefully select stocks, we could come out good, especially in the long run, if the Fed's plan and their way of doing this with the interest rate works out. And it looks possible we might have a mild recession, which would be good news for this market. We have signs that the economy is slowing down, and one of the good indicators of that is Federal Express's earnings are down because the number of packages that they're shipping has declined, and that tends to be a good preview of, or it's actually a current indicator of what's happening with the economy. The economy is slowing down if your shipments with Federal Express are slowing down. Another sign of the slowing economy is that retail sales in November slowed the most that they have slowed in nearly a year. So we're definitely seem to be past peak inflation, but it's a long ways to 2% inflation, which is the Federal Reserve's goal. Over the last year, rent increases, they increased about 10%. Well, their forecast increased about 5%. And hopefully, I think the Fed really wants that to reverse. And wages are increasing a lot, and the Fed has to put some kind of dent in the unemployment numbers for that to come down, uh, so that the wage increases don't go into a wage price spiral, which can be deadly, especially for inflation. In my own area where I lived, in Phoenix, I think price increases aren't really happening. They might be like 5% down, maybe 10% down, but it isn't really noticeable that much. Uh, I think the housing, with the Fed doing this, because people that borrow money are in such better shape than they were in 2008, simply because the banks were so strict on who they lended money to uh, on mortgages. And so I don't think we're going to have a big housing collapse. I think it'll probably reduce like 20%. That's sort of my expectation. But even that would help with the inflation situation. Used car prices have been a problem for inflation. They fell for the used car prices fell for the fifth time in a row in November, but the fall from May of 2022 to November of 2022, sold at the wholesale level, has been about 12%. Okay. And they're showing month over month decreases in price for used cars at the wholesale level for the fifth month in a row. But that 12% decrease, it's still not that big of a deal, because cars are still up year over year, 37%. Well, not year over year, since November of 2019, going back a ways, used car prices are still up 37%. So we've had a decrease from an unbelievable increase, but hopefully they will continue to decrease as we get some handle on inflation. There are many major stocks that are in trouble among the FANGs, but Tesla certainly has been having a very rough time of it and has gone down to 137. You know, they've lost anywhere from 3 to 400 billion of market capitalization. Wow. Uh, I think it's Musk's involvement with Twitter. Musk recently had a poll. He posted a poll on Twitter as to whether he should resign as CEO. He would still own the company, but he would have a different CEO. And the poll came out like 57% in favor of him resigning as CEO, because they want him to focus on Tesla. I'm sure all the Tesla investors, including me, ran to that poll and said, yes, for God's name, get away from Twitter. It's not your thing. Technology is your thing. Uh, he's a world-class technology genius. He's not a social scientist, and leave it to somebody more in that realm. Among the major technology stocks, Apple continues to outperform. It's been struggling, but it's managed to hold in the 130s and has gone up to the mid 130s when it looked in danger of going below that. And I think it's because of their share buybacks. Of course, it's Warren Buffett's of Berkshire Hathaway. It's Warren Buffett's biggest stock that he owns, and I'm sure that helps a lot. But Apple has bought $454 billion worth of its own stock. Apple has gifted its shareholders by buying $450 billion worth of its own stock within the last 5 years. And this year alone, it's bought a whopping $100 billion. No wonder its stock tends to hold up above other technology stocks. I think probably the safest area to invest in right now is healthcare because people always need healthcare, and especially with the triple threat of things going around this winter that are threatening our health. Uh, there's sure to be pharmaceutical companies that do especially well. And I think the one that's on target to do the best is Pfizer. Its symbol is PFE, and it has contracts with China to provide China with contracts to provide China with products to fight the thing that's been ruining our lives for the past 2 or 3 years. It seems like it's 10 years, doesn't it? But anyway, China is not only buying products from Pfizer, but the black market is buying products to fight the thing. So when formal exchanges do not work, the as in dreams, the tricksters will appear to make things work that cannot work in other ways. And it's too bad people have to resort to the black market. And hopefully, China will continue to buy things to protect their population. I think they probably will. So Pfizer has found a brand new market to fight the thing that's been ruining our lives since 2019. And that's good news for Pfizer, and it's good news for the world that finally the thing can be conquered, perhaps. Looking at the chart, you can see that Pfizer slumped. It's a 6 month chart. And in those 6 months, it's slumped down, but now it's recovering. And I think it's recovering because it's found that new market in China. It's undervalued. Its value is around $65 and it's selling for around $51. And it has a reasonable price to earnings of around 10, which is very reasonable nowadays. And also, its earnings growth rate is very good at 23%. So we have an outstanding company with an outstanding history that is being bought by the ETFs. Two of the healthcare ETFs that I always consider investing in, depending upon how risky I'm feeling at any given moment, is the Vanguard Health Care Fund, the ETF. It's VHT. Its three primary healthcare investments are in Johnson and Johnson, United Healthcare, and Pfizer. And also, I like to invest in triple leverage funds, and the triple leverage healthcare fund is CURE. That's CURE, like you cure disease. And again, their three largest investments, the individual stocks, are United Healthcare, Johnson and Johnson, and Pfizer. And of those three stocks, I think Pfizer has the best prospects simply because they found a new gigantic market, which is China. As we look at the chart, the 1 month chart of VHT and CURE, CURE is in blue and VHT is in green. And VHT has made a little bit over 1%, and CURE, the triple leverage healthcare fund, has made around 3.5%. So, but you can see right at the end there, they are starting to go up on around the 20th, which is sort of the beginning of the Christmas rally. And the Christmas rally is usually the most intense from Christmas on to New Year's. So hopefully this will carry through and a person can get some positive gains. Two stocks that are good to invest in. for defense. They make weapons of war, and which are being supplied to Ukraine by the United States and Europe and NATO. And the company that makes the Stingers that have knocked jets out of the sky since the Afghanistan war is Raytheon, whose symbol is RTX. Raytheon is also involved in making the Javelin. Lockheed makes javelins. Lockheed and Raytheon make the Javelin, and Lockheed's symbol is LMT. And together, they make the Patriot missile. Raytheon makes the radar system, which detects the incoming missiles, while Lockheed makes the missiles that actually knocks the incoming missiles out of the sky. Both of these, RTX and LMT, are excellent stocks to buy. Raytheon is overvalued. Its price is like close to $100, and its value is about $65. But I'm basing this mainly on the Patriots are just starting to be supplied to Ukraine, and they're going to need a lot more of the Patriot missiles. And also, their price to earnings is about 19, which isn't that bad, but it is a little bit overvalued. But a lot of this is going on their future earnings, which I think will increase a lot with supplying Patriot missiles. Their earnings growth rate is a good 14%. It's not outstanding, but again, I expect these statistics to improve a lot in the coming months. Lockheed is going to continue to grow, and again, they're involved with the Patriot missiles and with the Javelin. They have a better earnings growth rate of 15%, which is good, and they also have a better price to earnings of 18. So of the two companies, of the two stocks, Lockheed is probably the better buy. But they're both involved with the Patriot, and I expect both of these companies to go up because I think it's going to be a massive project to provide Patriot missiles to Ukraine. And at its present price to earnings and earnings growth rate, which I expect to improve, Lockheed is considered fairly valued. It's not overvalued. And looking at the chart, you can see that Lockheed Martin, which is in green, has made about 20% in the last 6 months, whereas Raytheon, which is in blue, has made about 10%. The triple leverage DFEN, DFEN, is in purple and has made 52%. DFEN includes other companies besides Raytheon and Lockheed Martin, so it's been a very good investment. Thanks for listening and watching. Be sure to smash that like button and subscribe if you haven't already done that, and hit the notification bell. I think we might be getting more than lumps of coal from Santa if he's good this year. And maybe this could carry into next year if the Fed's plans work out as advertised. Thanks a lot.